when you think about secondaries, the first thing people think about is, okay, what is a discount that I'm buying these private markets asset at? And that discount is really a reflection of, your point about confidence in the underlying GP's valuation. So just, again, this is sort of generalization, but when we think about the buyout asset class, typical discounts these days are in the 5 to 10% range. So, 90 to 95 cents of underlying GP valuation. On the growth side, that discount widens and it's a bigger range, maybe in the 20 to 30% discount. And then when we're looking at a venture capital fund, it widens even further, maybe in the 30 to 50% discount. So the type of assets that end up trading on the secondaries market, I think, is a reflection of the views, the confidence of the underlying GP's valuation. So that's point number one I want to add. Point number two, I think the previous comment was really about growth. If you remember, if you go back sort of right after COVID and you think about what happened to just US companies in general across buyout, growth, and venture, you first had inflation, which compressed margins. And then interest rates started to rise, which means companies then ran out of cash. And then I think when you think about last year, we're starting to see some slowdown in top-line growth. So no matter what type of company you are, you have these three factors that are impacting your ability to use cash to grow, either through acquisitions or just kind of reinvestment back into your company, into your capex. And you have now a potential slowdown in growth. And I think the latest macro forecast from BlackRock in the market is the U.S. economy is somewhat still resilient, but there's undoubtedly a bit of a slowdown in growth. And so I think it'll be interesting to see how valuations of the underlying GPs evolve to reflect these three factors that has now crept into the ecosystem that is impacting financial performance. And whether you're talking about an exit through an IPO, an exit to a strategic, there's also a third path, obviously, which is exit to another sponsor. I think there are a lot of growth companies that get bought out by the next large growth investor, the next larger fund. And then obviously now you have continuation vehicles and sort of LPs driving some of that distribution. So I think it's a fascinating valuation of the underlying GPs and what it ultimately trades at on the secondaries market is sort of a fascinating trend and topic to observe over time.